Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my host, Barrie Hederachi. Barrie, how you doing?
Doing really well.
On today's weekly show, Barrie will cover what I call the Big Five, which is ES, bonds, gold, crude oil, and the dollar.
And the euro.
And the euro, right? Dollar and euro, the opposite of each other there when we're looking at DXY. And I'm going to cover in the commodities section. We'll look at the NQs and Bitcoin. Then I'm gonna hit wheat, corn, soybeans, silver, copper, cotton. So a lot to cover. As you know, things have been from our posts on Twitter during the week and our recent weekly shows. We're in a very important cycle window. A lot of markets are coming into critical areas. Bitcoin is a perfect example of one. So let's jump right in with Bitcoin. We've been talking about this half square that we've been in for a couple months now. And on the top side, you're looking at, around 24.5. And on the bottom here, you're looking at around 16,000, 15.7, that area. But what I noticed today when I was doing my chart review, we're getting squeezed really tightly into this eighth of a square. And have you noticed that, Barrie?
Yeah, it's getting squeezed, all right.
Yeah, the price action is, we were going like a quarter, 3/8 for a while, and now it's all getting squeezed into this little eighth here. I still think we're going to push up, break this full square, do some sort of trickery up here, maybe go up to the eighth, which is around 26, 27,000, and then roll over again. Our target box remains here. So nothing's changed, being that we've just been sort of winding up. Any other observations that you have here on the Bitcoin chart?
Well, it's an interesting spot. Now, we're just keeping up with the theme of squares. We always talk about when it gets up to a major line, that's a key level to watch and where the market settles.
Right, it's a decision point.
Yeah, and here it's easy to see we're settling just under the level, so it's a little bit weaker than it should be. But the way it's coiling, we could break up a little bit and test the overhead. So we'll see. I think the next pullback is the key, which we kind of did last week, but it doesn't look like it finished. Well, the other thing is to notice is we're making, it's kind of sort of a sloppy uptrend is what I call it, because we're making higher highs and higher lows, but they're getting really sloppy.
Very marginal higher highs and marginal higher lows, but they are higher highs and higher lows. So we'll see. This is Dullsville right now, so we need to see something happen.
Yeah, it doesn't look finished to start something yet. So, but it's kind of in a holding pattern. So we'll see. And the key level to watch is obviously is the trend lines below, and your square above it. So
yeah, and by the way, all the levels for the squares are on a Google Doc spreadsheet that we'll share the link with when we post the video later tonight. So all the levels will be there. Let me throw it over to you. Let's jump into the Big Five.
All right.
Oh, so close to completing that ABC. Not quite.
Yeah, it's never done, never finished.
Right.
Last week we talked about, well, hopefully going up and testing these levels up here, and we had a box drawn in, 4164 being the sort of the minimum level of resistance, and this 4260, it's about 100-point spread there being the maximum, and this ABCD being just about the center point, at 4209, 4206. Somewhere in there. And we have this, 72 degrees up off the low at that price level. So that was what we talked about last week. And what did price do? Well, we talked about holding above 4,100 being important, and we more or less held above 4,100, which is bullish, right? Because we have to hand it that.
Yep. Good.
And
support.
The next level down was about 40.50. I would say it's really around 40.30 now, but we'll get into that in a little bit. Going into next week, the targets nothing's really changed. Price really didn't do much this week other than to stay in the same area, right?
Kind of fourth wave-ish, huh?
Totally fourth wave-ish. Yeah. And So what we mean by fourth wave is just kind of when it's going sideways and really non-directional, which we've had for 2 weeks.
A lot of movement, but makes no progress up or
Yeah,
down.
not much distance.
Yeah.
Yeah. So for the high that we do have in place, let's say you take a Wednesday, Thursday, we had some timing cycles that came into that high.
Mm-hmm.
Other than being, we have 36 degrees, which is the dash vertical line, which is it's square 72 half. So the dash lines are 50% in price and time. You can see on the way up, it respected the price level. We banged up against it for a while, then we had to pull back right on it before we took off, and that's one of the levels we watched. And rallying up, we basically rallied up into the 50%, which is the 36-day rally up into the high, and 45 degrees if you take solar degrees. And going with that measurement, we were 60 degrees high to high, 120 from this high, and 216 from the high in December. All right. And December high was kind of flat, so it could be 210, 216, either one. Either way, it works out. So we have several, we have a bunch of time cycles that line up to last week. And we talked about that the week prior. And if you guys haven't, if this is your first show, go back and at least watch the last 2 or 3. That way you can sort of, catch up to the same page. And if you like our stuff, please remember to like the videos and share and maybe hit the alerts so you know it as soon as we upload it. And it's usually, late Saturday night or early Sunday morning. So, but you'll know exactly when we do it. So getting back to, so we had those time cycle all expire last week. And I also mentioned last week that if we can maintain below this high on May 31st, and the high is what is that? 4,200.
Yeah, call it 42.
That if we can sort of turn it around for the next counter trend below that, it would be much easier to trade than if we get into this, into the middle of the zone, which would be much harder because then we have to sort of figure out if the balance is shifted to the upside, meaning we're on the next square, which opens up an entire, new space. Versus holding below, because then the pressures to the downside is much easier to work with it. And so far, it held below that level that we talked about last week. We didn't quite make the ABCD. Well, maybe we'll still do it. Either way, what we're going to bring forward for next week is that we did hit the minimum number of 41.64 in price. So that's something to keep in mind. And we have those time cycles that expired around the same time. So for next week, we want to keep it pretty much the same way. We want to, if the market is really bullish, any kind of a counter trend should hold above, let's say 4,100. We really want to basically hold these lows that we had, early August, right? And a secondary low or pullback area would be around 40.30. So there's 40.30, meaning if we take out 4,100, it can go another 70, basically, up until about 40.30 is still very bullish. You can see we're holding above the old highs, right? And long as we correct up here and we kind of hold and if we get some momentum kicking in, we can go up and perhaps try again in the zone. That's if we just sort of, just turn down from where we are now. So those are the 2 levels. You got that, right? 40.30 and 4,100 on any counter trend. If we push ahead next week, then, we're really stuck in this range around 4,200. And I would say to maybe follow us on check Twitter, because we'll update in the short term, like 4 hours and 30-minute charts to sort of see post what we see in the short term. But that's the big picture for now. So like the main takeaway is we're in a sort of a time window where we could have a change in trend, and that's the price area. And we already have time. We talked. Anything you want to add there, Ben?
Just that I've got some static time counts that are pointing around August 22nd. So it's interesting in that if we screw around here, go up and down and go nowhere and then make one last push, that could push out to that time frame.
Yes, we could certainly do that. Yeah. So
So
we go up here for another week and then yeah, we can hit that. Now let's take a look at the weekly chart, weekly
Weeklies.
S&P. Here we did 72 degrees down, pretty much exactly to the square. Now we're coming off of that, and the 50% retracement of the square would be right around 42.17, let's say. So that's why that 4,200 area is really critical. You know, how we're gonna, if we can get our business done below that or above it, it'll be very nice. Otherwise, it's gonna get a little dirty up here if we get into that zone, because there's a big battle that has to go on, right? Usually. So either way,
it's like another one of our decision points, as we like to say.
Definitely. You see what happened last time we were there. We rallied right up into that, and we had the big drop into the full square. So that's one thing that's working. So 4,200, that's a key area. Then I have 4140. I dropped in here. I would say for the week, watching the daily, this 4140. If you guys put this on your charts, I would watch this to see, even on a daily or even 4-hour basis, if price can really make, especially if a daily bar can make air above that level, and any kind of intraday pullbacks hold above that, 4140, 4139 in that area. I would take that as a signal that we're probably going to go and test, 42 plus a little bit. Okay, that would be a sort of a balance. Yep, that's all I got for the weekly. Let's move on to bonds.
Big move in bonds this week.
Yep, we left off bonds. A couple of weeks ago, we had this box drawn out for. First it was drawn out for resistance, and which we bounced off a couple of times, and we looked for it. If we got above the square, this 216, for a retest to hold that level, which it did. And then we looked for it to sort of test that level for a while, and it did that. And then we saw this ABCD, and we were looking at this 146. We thought it would go up and test that. And so far, bonds have been sort of following what we expected. But we really didn't get a hard test of the 146 or even the upper end of the ABCD, 147 or even 150 we have on the weekly chart. So bonds are not exactly acting as strong as it could technically. It's a little bit weaker. I mean, it's not that weak. We highs came pretty close to the half square, which was a low here. And then we have a high here. So it's close enough. So the key to next week is to see if we can hold above 140. If 140 can be held, then I think we can expect another
push. Yeah.
Another push up to test 146 to 140, that area. And to the degree how much air we can have above 140 will sort of dictate that next leg up. That's all I have. Anything you want to add to this?
No, I think it's a good synopsis. The weekly resistance is like 141 3/4. So a push up right. Yeah. So we're right on that area where there's support resistance on a weekly basis on my chart. So
right. So 140 is a level to watch. If we get under that, we're probably just going to sort of mess around above the square. And yeah. So if you set the square
at the low,
that's how we got this 140. That would be on the square. And so we'll see. I'll leave it like that. We'll see how it works out next week. If we can hold above that. Yeah. How it works out.
They'll tell us a lot.
Looking at the weekly bonds, 141 was the half square. We cleared it fairly well. It had a lot of enthusiasm. Then we came right back to test it. So the key is 141 on a weekly basis. We want to be able to be on one side or the other. And interestingly, we are right on it as of Friday. Yeah, that's it. We're watching 141 to be support. And if we can hold above that, I think we have more upside. If we can't, that might be the run. And we can use the daily level to sort of gauge that.
Agreed.
141, 146. Moving on to crude. See, I got bored last week.
That's a nice circle.
Yeah, and it ended up being a nice circle. You get little gaps in trading during the day. It was a lull, and I start fiddling with the tools, and I saw the curve here, so it fits fairly well.
Mm-hmm.
And you can see the end of the curve is really middle of second week of October, let's say.
Mm-hmm.
And so we'll see how it works. So the basic idea of doing circle work, as long as it's inside the forces to the downside. Now it doesn't mean it can't have a pullback to the line from below like we did here.
Mm-hmm.
But anyway, I'll just leave it on here to see how it works out. They're kind of fun to watch.
It's a good one.
Yeah, it's a good one. And the other thing to watch, notice. Well, let me pick it up where we left off last week. We left it off this 91 being key support. We had this entire zone to be support when we were above it, putting it up here a couple of months ago, 6 months ago, maybe. And so far we were able to, penetrate that and get back up, penetrate, get back up. And here we started to notice how it's losing momentum, really couldn't get up there. Then we had this false break on this bar, a false break above the prior high. And then once it got under 97, which was the key level that we were watching earlier, you can see, 2 days it really couldn't clear 97. Then 95, 91 was the sort of the bottom of the zone. When it's a Thursday, we broke through that. Couple of things here. Breaking through that also gave us a 72-degree correction, which is not bad.
72 in 36 days too.
72 in 36 days. So that squares out, which could catch a lot of people off guard, right?
Mm-hmm.
And the other thing is, if you take a look at, we do a lot of work, geometry, and see how, the old legs match up. And if you look at this first down leg and do an ABC off of that,
gets you to about 86.
Gets us right there, right?
Mm.
There we go. I would say it's close enough.
It's pretty close.
So what we have here is we did 72 degrees down, and and in 36 days. So that's squaring out.
That's squaring. Yep.
And we have an ABCD going in there. Yeah.
Yeah.
So my take for next week is if we start recovering quickly, and 88 is a key number. It's not a number we're watching right now, but 88 is 90, 88. That's an important zone if you're doing GAN cycles and GAN work.
In degrees, yep.
So anyway, so for next week, because we squared out from the last high, the lower high, and we have an ABCD completion from the high, this is a really critical zone. Now, two ways to look at this. If we take this low out,
that's trouble.
It's trouble, and I think we're definitely going down to 73, 75. Okay, and or at least half square here. That's it to the downside. If we hold it, and it's 88, 90, 91, and if we manage to clear 91, and
bullish.
I think it's bullish. I think we can look at the short term 4 hour, hourly, whatnot, and look to trade the long side if we can clear 91, and we start building up. If you guys are getting buy signals on your systems because of the square and the ABCD completing. Okay, that's sort of the two views, right? If it gets taken out, we can probably go lower, especially if 83 gets taken out. Then we're definitely visiting 73. And they're not, that's not the time to be, you don't want to be catching falling knives. But here, there's a chance because of the geometry that's set up.
Price this week in the crude market is going to tell us a lot.
Yes. And here's the weekly crude. And this is the box we had drawn out saying, hey, look, long as we're in here, it's bullish. And of course, we went and took that out, penetrated that.
Yep.
The thing to watch here is to see, hey, was that a false break or not? So we're watching. We don't know at this point. But the high did come in pretty well, right? We had some timing we talked about last couple of other episodes ago. So far as the low goes, and also hit the trend line. I have this trend line in here for a while. I can't remember how I got that exactly, but it's been in there. It touched this, and we touched it, and we had those other numbers that lined up. So it's possible this is just a flush. to clean out anything below that bar. And we have enough to believe that it could be a low. Now, like I said, if we can't make those other numbers on the daily basis, then we're probably going lower. But up until then, we're here. Is that good enough? And that 73, 75 is, it's right here. If you look at the weekly off of the 2020 low, we come up square and a half up until here. So that would bring us to 74. That'll be really good support. And I wouldn't mind it crashing down here. It's just we have a lot more to trade to the upside then. So we'll have to see. Is that clear? I just wanted to make sure that, that's the level to watch, and those are the two.
Well, what's clear is the price action going forward in the next few days and the next week is going to be key to telling us, where are the favorable odds? Turning, go higher, or flush further down.
Right. And 91 is the one to watch. No question about it. How we settle around that. All right, let's move on to gold.
Gold is finding its legs, isn't it?
Looks like, the low came in okay, came in on this 1676. So that looks good. And I think next week, what we have to watch is to see if we can take out 1814 to the upside. And if we can do that, I think between the 72-degree line and that, and we somehow make air above that 1814 and we settle down, I think we can at least go up and test, 19 and a half or maybe even the full square. Remember, we had a 90-degree mark down here, right in here, had like a little bit of a false break. See, when you get a real false break, that's when you get a gap on the upside. So here, we had that, right? So the low could be in. And if it is in, we want the pullbacks really, even a hard pullback, we want it to hold above 1730. This is a key level to watch. So have these on your chart, 1730 and 1814. Any, short-term other support you might have above 1730, that's fine. But 1730 sort of dropped that level that we really have to hold if we're going to go to new highs from here.
That next pullback is key, isn't it?
Yes. And we have that gap here. So, we'll see how that works out. But 18, in the meantime, 1814 gets taken out before anything else. Then any pullback should be holding above that, or at least above the 72-degree level, which is 1784 is that level. All right, let's move on to the weekly. Well, we looked at that this last week, the big picture. And so if you missed it, go back and watch the other last week's episode. We talked about the long term. Basically, it just came down to watching this 1670 area. We had ABCD that completes right in there, and the low came in there. So a lot of things came in, including false break, to this low. And so far, we've been up 3 weeks. We'll see. We should have at least the 1 bar correction in here. So we'll wait for that and see where that settles. So not much other than we know where to watch on the pullback.
Yeah, watch the next pullback. Yep.
And key level to hold it would be 1730. Dollar, it was holding. We got under the square, and we started holding below this 144, this 107 and a quarter, 107.50 area, and we talked about how that's weak for the dollar, and sure enough, we traded lower. And we sort of bouncing off this trend line. So it's a little messy now. We're not coming off of a corner. We don't really have anything here other than to wait till it gets above 107 or to see how we go up and test it next week. So 107.25 to 50 would be resistance. And if we can pop above it and sort of hold it, I think we have, 7, we can actually go up to 12. Not sure how some of the countries are going to feel about that, but that's what opens up technically.
Right.
But if it doesn't, 107, 25, 50 is the area to watch. And if we fail there, we'll probably break the trend line and go lower at least to the half square. So that's kind of what we're watching. Dollar is the exciting part of the dollar. It looks like it might be done for now. And here's the weekly. We talked about the equal moves and some of the structural moves, measured moves last week. And what did we have? We had square and a half going up into the high. That's squared out. So it's, ideal thing here would be for the dollar to make a lower high and then roll over, right? If this is done. And we do have sort of 3 drives, not super clean, but it's good enough. And this kind of vertical move usually, points to a finish, right? So, and that's why we've been bullish since God knows, probably since we started doing the show. I can't even remember for how long. Now it's sort of getting, we got to the end, pulled back. So now we're watching price level to see how strong the dollar is going into this sort of potential finish. So we'll see how that works. But for now, we're watching those level 107 key level to watch for next week. Euro, we left it last week expecting it to trade below the half square, which it did. And it's actually trading below quite nicely. And the trading space is between the half square, which is around 103, 102, 103, and the full square around par, which is 240 degrees down. And we have an ABCD that ends up probably at max resistance around 104, 104.2. Not expecting much. I think next week we could probably expect it to sort of trade in here, same range, maybe go check the lows a little bit.
It's kind of a weak bounce, isn't it?
It's a very weak bounce, yeah. Although, there's enough buyers in here to hold up the selling. So it's a very tight range. And if this is a 2, it could be a complex 2, and we can expect a 3. So we have to really watch the upper level, the 102, let's say 102.5, 103 level. And as long as it's below that, I think, possibly another test of the low, right?
Sure.
So not much. I don't see a huge risk reward value here for now. We'll watch and see how it breaks. I mean, it was fun going down. Now we have to kind of pause and take a little break to watch. Can't trade these things every day. So
pick your spots.
Pardon me? Pick your spots.
You got to pick your spots.
Exactly. That's the whole game. So, well, here's the weekly euro. We came down to par, and that was 2/3 of the second square. And it's sort of hanging in here. So I would expect the same, pretty much the same story as the daily. We're expecting it to sort of consolidate here and maybe test the lows one more time before deciding what to do. Kind of depends on the dollar strength too. So dollars sort of, if the dollar did finish up, then we might have a chance. But not in a big hurry. I think we have time. Time's on our side on this one.
No question.
That's all I got. Let me put it back to you.
Good coverage.
Thanks, Ben. We'll cover all the commodities. Well, if that's not a perfect hit, off of the 50% square, eh? So,
really nice, huh? So that's the NQs, and we'll get into that. What I like to do at the start of this segment is when I do the full chart review, before we record, I do a full chart review, look at everything. And sometimes I get a message, in the review. Something keeps coming up in the review. And this week, it was one of those weeks where I actually got a message, and I want to share with everyone. And the message I kept getting and looking and reviewing all the charts and all the different groups was not yet. It's not ready yet. And looking at sort of Bitcoin, ES, and NQ, they're not ready to turn down and start, the next wave down yet. And all the commodities that we've been talking about for 2-3 weeks now, hey, they're coming into bottoms. They're, they're starting to form these spike lows, and, let's see how they set up. Not quite ready yet. But we will review, some that are further along that I think you should pay more attention to. But just understand that the overriding theme for the week is that in the review and probably what we see is a not yet. And it kind of fits with also what you were showing where, maybe we're going to be in wave 4s in some of these things. So let's see. Let's go through and take a look. Yes, on NQs this week, we came in to the half square, perfect hit, and now we're stalling. And if you look at the bar on Friday, you know, the highs here, the lows here, and we ended up right in the middle. And if we do that for a little bit of time, it's typical of what we see in a wave 4. The key thing on the chart where the you know, the support and resistance we're looking at, the half square here is, you know, call it 13,400, and then the full square down here at 12,800. You know, chop around in here, up and down, and go nowhere this week, highly possible. Could we roll over and just head straight down? Well, we'd have to take out this full square for me to be convinced that we're done. Because if we come down, sit on top of it, it gives us, you know, maybe the strength to push up one more time. But if we get through and get stuck here, that would be a sign that, you know, the upside party is over. From a timing standpoint, I had some time counts, you know, 47 trading days high to low here, 47 trading days low to low here, 23 low to high here. So if I double that, it gets, you know, double the 23 gets me to 46, which is right near what the cycle we've been seeing on the way down. That puts us in the August 19th to 22nd area, which interestingly enough dovetails with the August 22nd time target that we talked about in your segment on ES as well.
All right.
So it's something to consider, something to think about. You know, maybe we chop around and then push up one more time to get us into this time zone over here, which is around August 22nd. Anything else jump out to you on the
Well, just that,
here?
you know, that early June, you know, we made that little triangle up there before we broke to the downside. So remember, in the S&P chart, we're right under that, right? We're kind of in the middle of that, or a little lower part of that. Same consolidation, but the S&P chart, same time. And NASDAQ, of course, you know, took it out early and we're way above it. And I'm wondering if NASDAQ's, you know, kind of led the way down. I'm wondering if it's leading the way up. If it is, well, you know, we can kind of watch it to see how it works out.
The other thing about that is, you know, this was where the most excess was. And that's a big clue that this is not a new bull market, that it's a bear market rally, because what led you up in the last bull market rarely leads you up in the next one.
Okay, well, there you go.
So the premise we have in the odds favor, it's a bear market rally, and that's just another piece of evidence that supports the fact that it is a bear market rally. So we'll see. We know the levels, we know what to watch for. If we get bars like this, you don't want to get whipsawed. You just want to let it resolve, let it pick a direction, and then get involved and trade in that direction. All right, let's jump into some of the commodities now, knowing that the theme is not yet. Okay, here's wheat. Now, wheat, last week we talked about, we had a nice 3 drive pattern, 1, 2, 3. Well, guess what we have now? We got 4 drives. So this is where the not yet comes in. And what it looks like to me, we did catch this trend line from late 2020. So that's a pretty important trend line that we caught. It's the 3rd hit on that trend line. 4th hit if you count these 2 as hits. Right. So that's interesting support. We've got the full square, obviously, that's support here. But what this looks like to me, this looks like congestion is forming, right? Up, down, up, down. Maybe we chop around with a little upward bias and create the sort of base to make the next move higher.
Right.
But that's kind of what's going on there. I'm still on sort of high alert for, you know, a really strong risk reward setup that we can get out of this sort of pattern. So I think wheat needs to be watched. I think it falls in the category of not yet. There's monthly support in the 756 area, which is right around here, right where the lows were. So there's a lot of really good support in here at the full square, and I think down to this 8th, you got weekly and monthly support in here. So whether we turn tail and go straight out of here or chop around and move out, the support area looks good to me. It's just finding the right setup to get involved.
Okay.
Anything differently you're seeing here in the wheat?
Not differently, no. I think we have to wait. Let it finish up.
Exactly. All right, let's jump in and look at corn. Corn, as you can see, we had a little stronger move. Wheat was more sideways, but corn, we had a nice push up. We had a first pullback that held the half square. Now we're coming back up and testing this full square. If we can't get above it, maybe this again is going to chop around in here. The low came in nicely. Really good support over here from previous areas. But one of the things I'll have you look at this fractal that's kind of playing out, Barrie. So look at this pattern, right? We had the down, up, gap, strong move out of that low, and then chop sideways and then sort of drift into another low. Down, up, gap, strong move out of that low, and now we've come back down and we're chopping around.
You're drifting.
Yeah, I'm not saying we're going to do this exactly where we're going to be sideways for a month, but it gives me the feeling that it may be one of those, not yet. Like it's not going to scream straight out of here, straight up, but mess around for a while, wear some people out, and then maybe it's a September move or an October move that really shoots out of here like this. So it's something to watch. I think this is a good low. Now we have to see if we hold on the pullbacks, if we make a higher low, and then that gives us the base to move out. Anything else to add on corn?
No, I think that's a good cover. Definitely have to watch that full square line above to see how the balance flips. But for now, yeah, kind of a holding pattern.
And this level is on the spreadsheet, but just so you know, it's the 615 area. Let's take a look at soybeans. So here's beans. Beans was a really good setup coming into this low. We had an ABC complete right on the half square. And then look at the reaction. Right, big move up out of here. The pullback came right into the full square and reversed. So that's a strong signal. Of the three grains, this one looks the best right now. With that pullback and reversal. So now we're watching to see, is it going to have to keep coming back and drifting? Is it going to chop around? Or are we going to, attack this half square area and be able to get up and go again? The level, call it 1485, 1486 here. That's the key on the half square. If we get on top and sit on top of that, odds favor the move up's gonna really get going. If we get stuck under it, maybe we chop around here in this half square for a while and set up a base.
But the reversal off that full square looks good.
Yeah, really nice.
Works out for now. Yeah.
I mean, look, here's another example, right, of a fractal. We came into this low, we made a move up, pulled back, found support on the full square, chopped around for 3 weeks here, and then took off.
Yeah.
So maybe it's going to repeat, but we know the marker, we know the level, right? We get above this level, things are looking strong for the next move.
Right.
Anything else to add?
No, we're good.
Okay. Let's jump over and take a look at silver. Here's the metals. One of the metals, Barrie covered gold in his review. So let's focus on silver here. We put it a note and we highlighted it as one of the charts for the last few weeks when this pattern came in, where we were sort of chopping around this full square here in the 1880, 1890 area. We get a nice move up, and now we're pulling back. So the real thing we're watching this week is, can we pull back and stay on top of this full square? If we do that, it gives us a good risk reward ratio and good odds that the next move is going to be strongly higher to take out this half square here and probably head up and test the full square. We broke in the downtrend line. We had a nice strong push out. Now we're sitting in this market waiting, saying, okay, can we pull back and hold this full square? Anything else you have to add on silver?
Well, pullback meaning if it gets any reversal off of this zone is okay. I think it's worthy of a play.
Yeah. Yep. I mean, because you can see structurally, it's right here on this 8th line.
Yeah.
That would be the best structure if it could hold there, because it would sit on top of these highs that were going into that low.
Yeah.
But silver looks good, as gold looks good. We're just really trying to find the area where we can get involved for the next move higher, because the next move is the one you want to catch. It's the third wave, right? Here's one, this could be the two, and we want to catch the strong third like this. Now, here's a good example. We had a low here, first move up, pull back, and then there's the big move. So that's what we're trying to find. Let's look at one that got really beaten up and now is in a really interesting position. Copper. So off the highs, copper went down, 4 full squares. It's a big move. And we had a strong move out of here. First pullback held above the full square, and now we're reversing here. So to me, the real power move comes when we clear this. Let's call it 362, 363 area. We clear that. You got to move up to the full square. And, then you're going to be testing these, this cluster of lows that happened on the way up and when you were building your top. But this is what you want to see out of the low, right? You want to see a strong move up. See how we hesitated for 2 or 3 days on the full square. Then we got through it and we pulled back. Couldn't even get to it. We just stayed on top.
And already has a good reversal as of Friday. So something different.
Yeah, so this is one to watch for potential strong moves higher, and that's copper.
Yeah.
The last one we're going to look at is one of the softs. Also has gotten beaten up on the way down, and that's cotton. And the key thing you're going to see here, and what we're in the markets like the grains we were talking about, and what copper's already done is what cotton has done too, right? We had this low come in an area of previous support, after a pretty sharp move lower. Now we've pulled up. We had some trouble. Like it took us about a week to get through this full square, but we got through it, and look at the pullback.
Yeah. Good check back. Clean,
right on top of the square. And now we've got a reversal. So right now the target on copper is this half square, which is, call it 104.30. And we closed Friday at 96.13. Right. Nice risk reward. We know if we get below here and we can't clear it again, if you see any weakness that gets below here, it's not done. It's not ready yet.
Right. So
this is the kind of setup that we look for. A low in place, thrust up, pullback that comes in top of a support level. So this is a really nice setup in cotton right now. What I say not yet on most of the other ones is we haven't seen the results of that first pullback or that important pullback yet. So that's why most of the markets are in a not yet place, whereas copper and cotton have come to a stage where, okay, we can make an assessment that, yeah, there's a good risk reward, good odds for a bullish trade in both. Any perspectives that you want to add on cotton?
Well, I think it's ready for short play, coming off that reversal. We did the reversal off, reversal meaning here taking the high of the low bar out, which we did on Friday.
Right there.
We have a reversal, so I think we got to watch it now. We have to watch the high and the low, mainly the low of Friday. Long as that's held, I think we could probably make a push to the half square.
Agreed. And the interesting thing too, there's really important monthly support and resistance at 95.5, which is right up here. So anything above that and the monthly is bullish. You're basically sitting on top of full square. And we did yesterday record our monthly show, which should be out, anytime today. But it really helps when you look at the monthlies to know, where the bigger picture is. And that's why I try and add some flavor on these dailies. So monthly support resistance is right here. And we're just poking above it now on a daily.
Yep.
So it's important. It's a good spot. It's a place to where you can get involved with a market that's kind of had its head handed to it here in the last 2-3 months. But that's what we look for, right? You look for places where there's been liquidation. If you're bullish, you look for places where there's been liquidation into long-term support, and then you want to see a shift in the momentum, and that's what we're starting to see in these commodity markets. Most of them, it's a not yet, but as I said, a few of them like cotton and copper, we've gotten signs that the shift is starting to take place on the shorter time frames. Where's your focus going to be this week, Barry?
Definitely in the S&P.
Mm-hmm.
Gold, watching bonds. Dollar, not so much, but I think crude is the other one to watch to see if we can, pull over that 91 or not. So
yeah, crude's at a critical spot, right? We either have put in a low and we start building with the shift, or it's going to be next leg down to that into that 70s areas. Yeah,
yep, exactly.
So we'll see. Well, listen, have a great week, everybody. Remember, we're in the middle of a big cycle window, so be aware of the changes you see and the changes you feel, because those are the things that are going to be affecting perceptions, which affect prices of assets. So we're on the lookout for these sort of turning points, and hopefully we'll be able to bring them to you as they come up. Have a great week, everybody. Barry, have a great week.
Thanks, Ben. Good coverage. Have a good week, everybody.
All right.
Bye.
Bye.